Did you know that if you had invested $100 in Amazon when it first went public in 1997, it would be worth almost $120,000 today? Now that's the power of investment. It's like planting a seed and nurturing it over time. As the seed grows into a tree and starts bearing fruits, your investment too grows and yields returns. So what exactly is an investment? To put it simply, it's the process of putting your money to work to start or expand a project or to buy an asset or interest where those funds are put to work with the aim to produce profitable returns or appreciation. Investment is a crucial part of financial planning. If done wisely, it can provide you with financial security and, more importantly, it can help you grow your wealth over time. Let's delve a bit deeper. There are several key concepts and terms related to investing that you should be familiar with. Stocks, for instance, represent ownership in a company. If you buy stocks, you're essentially buying a piece of that company. Bonds, on the other hand, are like loans. When you purchase a bond, you're essentially lending money to the issuer for a certain period of time. In return, the issuer promises to pay you back the original amount along with interest. Then we have mutual funds, which pool money from many investors to invest in a diversified portfolio of stocks, bonds, or other assets. They are managed by professional fund managers who allocate the fund's assets and attempt to produce capital gains or income for the fund's investors. Investing can open up a world of possibilities, but it also requires knowledge, research, and understanding. It's not just about making quick money, it's about planning for your future, ensuring financial stability, and building wealth over time. Understanding the basics of investment is the first step towards building your wealth. And remember, every successful investor started with the basics, so let's continue this journey together and unleash the power of investment. From stocks and bonds to real estate and commodities, the world of investment is vast and varied. Each type has a unique set of characteristics that can either magnify your wealth or diminish it, depending on market conditions and the choices you make. Let's start with stocks, also known as equities. When you buy stock, you're essentially buying a small piece of a company. The value of your stock rises and falls with the company's fortunes, which can be a double-edged sword. On one hand, you stand to gain if the company thrives. On the other, you risk losing your investment if the company falters. Bonds, on the other hand, are a bit like loans. When you purchase a bond, you're lending money to a government or corporation for a certain period. In return, you receive interest payments, and at the end of the term, the bond issuer repays the principal. Bonds are generally considered less risky than stocks, but they also typically offer lower returns. Next up, real estate. Investing in property can be a profitable venture, but it's not without its challenges. It requires substantial upfront capital and ongoing management. The property market can also be unpredictable, but when it booms, the returns can be substantial. Then there are commodities, physical assets like gold, oil, or agricultural products. Commodity prices can be volatile, influenced by factors such as weather, geopolitical events, and supply and demand dynamics. But they can also serve as a hedge against inflation and currency fluctuations. Finally, let's not forget about mutual funds, ETFs, and other pooled investment vehicles. These allow you to spread your money across a variety of assets, providing the benefit of diversification. Remember, putting all your eggs in one basket is rarely a good strategy in investing. Knowing the types of investments available can help you make informed decisions about where to put your money. But remember, every investment carries some level of risk. It's important to understand these risks and manage them effectively to achieve your financial goals. Investing is not without its risks, but with great risks often come great rewards. This is a fundamental truth of the financial world. As you venture into the realm of investing, it's crucial to understand that the possibility of loss is a part of the journey. Market volatility, economic downturns, and even individual business failures can all contribute to potential losses. Imagine, for instance, investing in a promising tech startup that unfortunately doesn't take off as expected. The money you put in may not be returned, leading to a financial loss. Or consider a scenario where you've invested heavily in stocks, and the market takes a sudden downturn. your portfolio's value can decrease significantly, which can be quite disheartening. But don't let these scenarios scare you away. While they highlight the risks, they also pave the way to understanding the potential rewards of investing. Let's consider some real-world examples. Think about those early investors in companies like Amazon or Apple. Back in the 90s, Amazon was just another online bookstore, and Apple was struggling to regain its footing in the computer market. Investing in these companies was a risk. There was no guarantee of success. But those who saw the potential and took the plunge are now reaping the rewards of their foresight. Their investments have grown exponentially, yielding returns far beyond what a regular savings account or fixed deposit could ever offer. Or consider real estate investing. Yes, property values can fluctuate, and there are no guarantees. But over time, real estate has proven to be a reliable investment. Those who bought properties in up-and-coming neighborhoods years ago have seen their investment's value multiply as those areas have developed and grown. Investing, then, is a delicate balance of risk and reward. It requires courage, patience, and a keen understanding of the market. It's not a path without its pitfalls, but the potential upsides can be substantial. Being aware of the risks and potential rewards can help you make smarter investment decisions. With knowledge and careful planning, you can navigate the world of investing, turning risks into opportunities for significant financial growth. Investing isn't about getting rich quick. It's about making thoughtful, well-informed decisions. A cornerstone of successful investing is starting early. The earlier you start, the more time your investments have to grow, leveraging the power of compounding. Next, consider investing consistently. This strategy, known as dollar-cost averaging, involves investing a fixed amount regularly, regardless of market conditions. This can help you avoid the pitfalls of market timing and reduce the impact of market volatility. Emotions can be your worst enemy when investing. Fear and greed can lead to poor decisions like selling when prices are low or buying when they're high. Keep emotions out of your investment decisions. Stay focused on your long-term goals, not short-term market fluctuations. Finally, remember that diversification is key. Spreading your investments across different asset classes can help reduce risk and increase potential returns. With the right strategies, you can navigate the world of investing with confidence. So we've covered a lot of ground today, from understanding what investing is to the different types of investments and strategies you can use. Let's take a moment to reflect on the key points. Firstly, we learned about the transformative power of investment. It's not just about storing your money, but actively growing it, turning it into a wealth-building tool. We then explored the different types of investments, each with its own potential and risks. From stocks and bonds to real estate and mutual funds, there's a world of opportunity out there. Next, we delved into the risks and rewards of investing. Remember, greater potential returns often come with higher risk, but don't let that deter you. With the right strategies, you can manage these risks effectively. And finally, we discussed some strategies for successful investing: diversification, long-term planning, and continuous learning. These are your allies in the investing journey. Remember, investing is a powerful tool for building wealth. With knowledge and a sound strategy, you can make your money work for you.